much, so we'll take it from there. Want to welcome everyone. We're going to be talking today about what we call a Pt1. And bear with me, I'm usually not that great with slides, so it's this way and it's that way.
Yeah, that way.
Okay. So we're going to talk about an ICO versus a Pt1. We're going to take about 10 minutes on that. So could I ask a favor? I'm not wearing a watch, I'm carrying my phone. Yeah, can you give me 10 minutes, give me the countdown? And then, and what is a Pt1? I'm just going to, because I'll use that a lot. We call it a public initial blockchain offering. We don't call it a token, we call it a blockchain offering because ultimately, whether today or down the road, whatever you're doing, it eventually connects to the blockchain. So that's, and we don't like the word ICO. And we certainly don't like the word ICO, which you heard used this morning. I never call it an ICO. Why would you call it an ICO, right? And it was funny, I was texting my team and not saying anything against it. Great. And then the next, oh, how did that work? Okay, I'm going to do it this way. So the next piece is we're going to build a Pt1. So everybody here is going to be part of building a Pt1, where they're going to have somebody from your team present it, and then we're going to have 15 minutes of discussion. So it's supposed to be a workshop, you know, it's a workshop. So that's the agenda. So, you know, explaining a token offering to the street is it's really quite interesting because, you know, on one side of the mountain, okay, you've got, I'm not insulting anyone here, but you've got a whole bunch of libertarians. You know, like Snowden and the whole group. They all want free speech, they want no regulation, they want nothing to do with government, it's, you know, it's the whole situation. You know, the Wall Street's bad, and, you know, there's credit issues, there's all kinds of problems going on. But yet on the other side of the mountain, you have all the people with money, right? You have all the regulators and all the people with money. And what we've tried to do at Pegasus, and it's not a plug, but we've just tried to bore a hole in between the two groups. So the real key here is understanding, and I don't know if many of you saw the panel we moderated this morning, but it's all about not saying one is better, whether a regulated offering through the current establishment being an IPO, an RTO, or does everybody know what a CPC is in Canada? Okay, so a CPC is a capital pool corporation. I'm so old I was doing a JCP, which is only available in Alberta originally. And what it allows, so how it works is people put a pool of money together, and then from that pool of money they look for a target acquisition. So they're a little public company that has just money in it and a whole bunch of shareholders. And they look for a target, then it becomes an RTO, reverse takeover. They buy the target for more shares than they currently have, they issue the shares, and by virtue of the target having the majority of the shares, the target owns the company, the public company. So that's what a CPC is. It was originally called a JCP, or a Junior Capital Pool, which was out of Alberta. And then it became a CPC that was offered across the country. It's a great way. In the US, they call them SPACs. And we do have SPACs in Canada, but this is a real baby SPAC. Now, I will say to you, I am not a lawyer, I am not an accountant, and I've been accused of being both. So anything I do say, please keep in mind that you should always, as in any investment or any other type of transaction, first thing we recommend is having a good lawyer, having a good accountant, and having someone in the investment community that you trust so that you can bounce ideas off of. So we don't offer those services, so we really we'll leave that at that. So at the end of the day, it's really important that understanding that there are a lot of regulatory compliance issues, and again, both from where you're selling your potential ICO or Pt1, where you're selling from and where you're selling to. So those are things to keep in mind. So that's fine. Okay, so what is the blockchain? Blockchain is, you've got a centralized model, you've got a decentralized model. So Amazon would be a centralized model, the AWS would be a centralized model, eBay would be a decentralized model, where you have many sellers doing something off a single platform, and then you have the distributed model, and that's the blockchain, right? And what's a great application for this type of technology? Well, if we look at, something like voting, a decentralized blockchain application could be something in the voting, community. You want to vote for a project or even for someone into power, because the blockchain offers you the ability to do really thin cloud storage. You can monitor the assets or the contracts, so the voting contracts. Record identity, and I think we've heard a lot about that from IBM this morning. So the records and identity could be verified using blockchain. and payment remittance, or in this case, the tabulation of the voting could be managed. And at the end of the day, you could have a voting platform that's all on the blockchain. So what is a PIPCO? So we start off with a PIPCO as saying the token is a security. Now I know you're going to hear tokens a utility, tokens this, tokens that. But at the end of the day, whatever type of token it is, we contemplate that it's sold as a security. And the reason we do that is we get away from all the noise, right? Again, for those who may have attended this morning, we look at a token as a security because if it's a securitized item, it generally appears on your balance sheet. Right? Everybody understand that? You see capital stock on your balance sheet? So let me give you an example. Let's say you're in the business, it's a utility offering, and you're in the business of doing something with the points, some type of points, some types of reward offering that is subject to a closed group. But a merchant wants to buy some of these points in advance to give away. So what would be a real world example? Everybody here carry an air mile card? Right? Air mile card, Aeroplan, you're in any kind of points program? Well, a lot of those points companies, what they do is they sell groups of points to a merchant, and the merchant gives the points away, right? So they're forward selling the points. So that comes onto their books as deferred revenue as a liability item, but it's on their balance sheet. If you're a utility and you're selling a good, a service, an asset or property, you're now selling something of value. What happens when you sell something of value? You pay tax on that, right? I sell a car, I pay tax. So if you're designing a PIPCO or an ICO, whatever you want to call it at the end of the day, but not an ICO, then, and I've heard it used in New York too, so it's funny. Then at the end of the day, we look at it as a security for the sales process. So that's where we start. In the sale process, we look at it as security. We also look at things like capital liquidity. That's our fourth pillar. And I'll come back to that. The next thing we look at is use case. What is the use case that you're looking for when you're creating an offering? So what value does it provide in the marketplace? Today and tomorrow and down the road. And there was lots of discussion about persistence and all kinds of issues with the blockchain, but what is the use case? Does it make sense? I saw an amazing, most amazing algorithm for fund trading last week. I've never seen something better, but it took me 45 minutes to understand it. It took them 45 minutes to explain it to. You take it into a broker and investor, you got 30 seconds. If they don't understand it in 30 seconds, call it the elevator pitch, you're done. So what's your use case if you're going to design a token offering, and what do you do with that? More importantly, what's your market case? So it's a security, you've got a use case, market case. What is your market going to look at? Right? That's really important because there's an old saying from the gold rush, by a guy named Diamond Jim Brady, you can have the best product in the world, but if you can't sell it, you've got nothing. So you can have a really great use case, but you can have a crappy market case. And without that, then capital liquidity. So how is someone, if they treat it as a security at the beginning, and we go through the Howey test or the Pacific Coin test or whatever you want to use, what does someone want from that investment? As any investor, you want a return on your investment. So how do you trade it? How do you get it out? We have a bit of a proprietary process, not to go into great detail, but I would be remiss if I wasn't plugging us at this point in time, but we're bringing a crypto debit card to the table so that every single one of our clients who does a token offering, their token will be able to be liquidated potentially through a debit card process, either sponsored by one of the majors. So that's the way we look at a PIPCO. So now we're going to talk about building a PIPCO. And so we're going to break it into, so am I close to 10 minutes at all?
Yeah, you're presenter.
Wow, that's great. Wow, I talk fast. So what we're going to do is, it's going to make it easy. There's 3 rows here of chairs and tables. So this first row, we're going to ask you to be one group. The second row, we're going to ask to be a second group. And the third row, we're going to ask you to be a third group. What you're going to do is you're going to break into groups, and I'm going to ask you to deal with those 4 things. I'm going to ask you, what does your token look like? And someone decides to leave at that point in time. That's okay. Come on in. So we want you to break a group, and I want you to do 3 things. I want you to use
Just a couple more seats.
Yeah. It's good if you take the seats at the front. We need you up front. There you go. So at the end of the day, what we want you to do is we want you to look at the token. We want you to, and it could be it could be a use case that you're already looking at. We want you to design a use case. What's an idea for a token that you think would be a great idea? You don't have to share anything proprietary. You can use something that's already in the marketplace. I don't really care. What's the market case? And how are you going to look at liquidity? So we're going to take 15 minutes. I'm going to walk around, and I'd like you to, maybe there's only 3 of you. Why don't you scoot over here? Okay, just come over here and talk. And again,
It's a workshop.
It's a workshop. I was told it's a workshop, and you got to make it work. And then we're going to ask one of you to present something, just to talk about it. Then we're going to talk about it for another 10 or 15 minutes. Does that work for you guys? Is anyone apprehensive about this?
Yeah.
Okay, well that's what I'm here for. So guys, come on over. Just scoot over here. With that middle group, these guys, can you go over there?